really great to be here, and yeah, please feel free to ask questions or interrupt or turn on your video. Love to see everyone in the room. And if you have any feedback or questions or thoughts, I was planning to start off by introducing myself and then introducing a little bit about the Unit network and the Unit ecosystem and what the why, the vision, the how, and what is going on with Unit as a technology, but also as a movement, and the various initiatives they're working on, and then touch on the point of this talk, the Munich token, and talking about the concept of the token economy. So if anyone has any questions, feedback, thoughts, advice, please feel free to reach out in the chat, and then afterwards, welcome to reach out. So to begin, my name is Michael Healy. I'm half Singaporean, half British. I've been building technology projects and companies for the past 13 years. Started off in the crypto space in 2010. I was building the app for WikiLeaks, and well, I guess going back a little bit, I was building a bunch of applications. I was very early involved in the Web 2.0 growth of the internet from the early 2000s, from the mid 2000s to the late like 2010, 2011, when we started seeing a more dynamic internet. Helped build a website builder, which was quite popular, and ran a video conferencing technology of a few million users. And around that time, I was super inspired to work on the WikiLeaks project. I thought it was amazing, providing transparency and accountability, not just to government, but to corporations. And my background is in engineering, so I built the Android app for it, 2010. And what happened in December 2010, the governments froze our Visa, MasterCard, PayPal bank accounts, and kind of restricted the donations from happening. And we were fortunate. Well, what seemed really bad at the time was, we had everything frozen. We resorted to using Bitcoin, and that was my introduction to digital assets. I was also running a peer-to-peer video conferencing technology, so being able to have calls without a central party, like in the case of the software we're using now, Zoom, it goes through a central party. And I was really amazed by the idea of decentralized applications. And then fast forward a bit, I worked at the third biggest venture fund in Europe. It was Wellington Partners, had an office in London and Munich, invested in early stage tech companies. And what really occurred to me was a few things. One is that the internet was this super powerful thing. A lot of people doubted it after the dot-com bubble, and it really transformed access to information. Before the internet, you would have to go to a bookshop or a bookstore, and education, access to knowledge wasn't as available as it is. And when the mobile phone came out in 2008, everyone was like, who's going to pay $1,000 for a phone? And it's amazing how it's really commoditized access to communication. And what I found when I was working at this fund in London, having started a company and sold it, was that the way wealth is distributed in the world is largely held by the founders of things and the investors of things. And the customers and employees, they don't really get a piece of the pie, so all of the value created is largely held by the founders and investors. And the underlying motivation behind Unit and the token economy creates a society where the ownership of things is not just held by the founders and investors, but also by the customers and employees. So we imagine a future this decade where there's going to be tens of millions or hundreds of millions of tokens, and they represent very specific things. So each of us here will have our own personal tokens. The projects that we speak about. Maximilian gave a really great presentation earlier. I would love if his organization had a token I could buy into it, support in it, participate in the community development, the decision making. However, I can help support the community thrive. And this will do a couple of things. Like one thing which is really profound, it will allow value to flow much more freely. So at the moment, people think that money flows extremely fluidly. It's easy to do a bank transfer. There's many payment apps and solutions. But the cool thing about tokens, it really steps it up. It's kind of like before, making a phone call was really easy. It cost €1 a minute or $1 a minute. It wasn't tough. You just needed to dial someone's number and you called, and it was if you talked for 10 minutes, it's €10. If you're doing business, it's maybe not that expensive. But compared to where it is now, where you can talk with someone for an hour, you can video call them, you can constantly share and interact. It's a world of difference. It makes like the old world of dialing up phone calls, sometimes not even knowing who called you because no call ID, seems so backward, and I'm excited for a future where, value just flows much more freely. The fund I was working at in London, we invested in about 15 projects a year of 3,000 companies. So, really excited for this more equitable world where value just flows around much more freely. And brings us to a second point, which is where the inequity is less prevalent. So, if you look at how mostly the founders and investors in the world after a lot of the value at the moment, in the very near future, the customers and employees would get a piece of that pie. So if you look at Uber, started in 2011, grew to 80 billion valuation with 2 million drivers. None of that value went to the drivers, and none of it went to the riders. Or like, for instance, the service that we're using now. All of us are helping to generate, the $1 billion in valuation for Zoom, but we don't get to easily participate in the upside. Fair enough, we benefit from the service and the product, but we're an integral piece of the value creation. It would be interesting if there was a way in which, when people pay for the service, with pro accounts, they were able to distribute some of it to us as the customers or the employees, the people that help create content or the people that help participate in the economy. And then I guess that brings us to, how are we going to make this happen? Like we live in a world now where there's, 15,000 tokens, and outside the top 200 of tokens, a lot of them are non-existent. So many scams, very few actual real products or services. It's very hard to look at tokens and kind of tell, is this token something that's going to be around next year? Is interesting Maximilian's point earlier of how fast it's changing, the different protocols, and we thought long and hard about this, about how we can bring this future to be a reality, and it brings us to industry tokens and city tokens. So the Munich token is one of these city tokens, and it's effectively a way of capturing the token economy for a particular city. We thought, what's going to be the biggest communities, the biggest token economies in the coming 3 years, the coming 5 years, the coming 10 years. And we thought, okay, where are the biggest clusters of economic activity, and where are the biggest clusters of people, and innovation happening, and, businesses, projects emerging. So we basically looked at, the biggest cities in the world, the most economically viable and strong is, places like London, Berlin, Munich, Zurich, New York, Hong Kong, Dubai, Tokyo, and effectively, what we're doing with the Munich token, all of these city tokens, is we're providing a way where, if someone believed in the token economy for a particular region or a particular industry, they could, purchase some of these tokens and able to capture the upside of that token economy. It's effectively very similar to, people are talking a lot about DAOs and, talk about community tokens this year. So I guess these two things are really not new, but it really comes in waves, same with like the NFT craze this year. And what we found is that the reason why there are these crazes and, there's this huge influx of, excitement and passion and advocates is largely due to the amount of momentum and capital that is in the industry. So, for the past 2 years, we've been telling people about issuing tokens for communities, for people, for art. And then, when people start seeing, pictures of digital art being sold for tens of millions of dollars, the biggest skeptics, jump in and they're like, oh my gosh, I believe this is going to change the world in the future. And what we're doing with these industry and city tokens is really providing a catalyst, for the countless number of businesses, the countless number of organizations within these cities and industries, to really allow them to thrive within the token economy. And you could be asking like, hey, what's the point? Like, why would I buy a Munich token? Like what does it mean? Like, what's it backed by? What's the value? Is it a good time to buy it? And this brings a few different points. One of them is the concept of a treasury. So it's really quite simple, but we believe it to be super profound. So with the internet prior to the .com bubble, people looked at it and there were people used to say, it's an internet company, you don't need a business model, it's kind of different. And then, the dot-com bubble happened, and then people are like, okay, like now we don't have investor money, like venture capitalists throwing money at stuff. How do we keep it sustainable? And then, things like Google figured out how to do advertising. You had subscription businesses, you had e-commerce businesses, and it became a very viable economic business engine. The same with apps. When Instagram was acquired for $1 billion, people were like, oh my gosh, this is crazy. It's an 18-month-old app, and it's valued at upwards of $1 billion. Like, what is going on? It's only got 30 million users. It's got no business model, and it got lots of people interested in building apps. And eventually, Instagram turned out to be one of the most valuable assets of Facebook. So it's a brilliant acquire. We largely see the same thing with tokens. So a lot of people look at tokens and they go, tokens are special, cryptocurrencies are special. They don't need, an economic engine. You don't actually need a product or service. You just need, people staking, locking up the tokens, or you just need people buying it. You just need new investors come in. And we think this is great in the short run. It's great to drive in interest. It's great to bring a lot of attention to it. But for this industry to thrive in the long term, and for the long tail of tokens to succeed, there needs to be an effective way of measuring the value of tokens, and there needs to be a way of incentivizing the token operators, the community, to build these tokens in a sustainable way. And it presented us with this super amazing solution, and that is this concept of treasury. Like we believe that in the next 2.5 years, 3 years, the next bull market that comes, people are going to look at tokens and they're going to go, okay, if there's a Michael token, or like we have a unit football team UNFC token, what is backing up the token? Like how much digital assets are backing it up? So, if let's say, Mark or Jacob or Carsten or Joe, they had personal tokens, and I'm like, I want to invest, I want to buy into each of these talented individuals. There needs to be a way to tell which one is good. And let's say a friend recommended me a project somewhere around the world, and I'm like, how do I tell it's good? So the treasury is basically a piggy bank. It's like a decentralized wallet where you can see exactly what the amount of, you can think of like dividends, or the amount of profit or value that the project, the token has, and it creates this thing called a floor price. And the floor price is important because if, let's say, the Jacob token, there's 100 Jacob tokens, and there's $100 in this treasury, $100 of digital tokens, like stable tokens, Bitcoin, Ethereum in this treasury, that if the Jacob token is trading at $5 or $10 or $50, it is not going to drop below $1. So it basically incentivizes Jacob, to build up his treasury. And if the treasury goes up, it pushes up the speculative value of it, or the trading price of it. And this is going to be super profound because, a lot of cryptocurrencies, digital assets, they trade of upwards of tens of billions of dollars, and it's hard for them. It's hard for them to build a treasury, and they're kind of like, let's forget about building a business model, an economic model, product or service, which, creates, lots of economic, which captures some of this economic value for the token. And the business rules don't apply to us because we're a token. And we think that, that will likely not be the case. Want to touch on here, really quick question from Christian. Do you think that tokens will replace traditional stocks on the stock market? For instance, Apple stock, Tesla stock? Absolutely. So, the really cool thing is, if you went down any major street in any major city in the world, everyone used to have, newspapers, and you had, a lot of people in the world were, grew up being delivery boys, like newspaper delivery boys, right? And now, if you think about when was the last time you sat down and held a physical newspaper, or you walked into a shop and you saw a rack of newspapers, it's kind of like, wow, I can't believe that went away like that, right? Or you think about MP3s, CDs, or the way people died, consume music, or watching TVs, so with like Netflix or with Spotify, it's so vastly different. So it might be so tricky now to imagine, all the biggest companies in the world, the New York Stock Exchange, the Frankfurt Stock Exchange, the FTSE, the Nikkei, all of these big stock exchanges. But, there's several problems with this. Like, speaking of since we're at the World Munich Forum, one of the biggest poster childs of Germany, Wirecard, multi-billion-dollar tech company, one of the poster childs of German tech, they tricked the auditors, they pretended they had $2 billion. The regulators said, yep, they've got this amount of money. And then, they, like Frankfurt, one of the most regulated stock exchanges in the world, had a huge mishap. And, if you can't even regulate, a few hundred companies or projects, and you can't regulate, thousands of companies in the case of NASDAQ, or tens of thousands of companies. How are you going to regulate millions or tens of millions or hundreds of millions of projects and companies? So this treasury really solves that. It creates a solution where you assume that, let's say Joe or Carsten or Mark or Manuel here created a token. You assume that even though they might have the best intentions, you need to determine how strong and viable the token is based on its treasury. So it kind of looks into the worst case scenario and incentivizes the projects to build up their treasury. And if this treasury grows up, it pushes up the trading price of it. So really excited for a future where, all of us here will have a wide portfolio of our favorite projects and people and businesses and organizations in Munich and every other city we go into, and lots of different industries, and the Munich token, we believe, is going to help catalyze and kickstart this evolution, and it's going to do lots of really cool things. I actually spent a few months living in Munich when I was working at this fund in London. And one thing I noticed was that the social mobility in Munich wasn't as prevalent as other places in Europe. It's very tough for someone to work their way up. There was a very high, strong social hierarchy. So the cool thing about tokens is they really provide that accessibility. So if someone wanted to start a business or someone wanted to partake in an investment, they didn't need to know so-and-so or be part of this family or not so much red tape. It was just much more accessible. So that's super simple, but super profound. And the cooperative aspect of it. So, at the moment you've got, the management, the owners of the company, and then, they're working with the investors to push the customers and employees as much as possible to drive shareholder value. And driving shareholder value is really not a bad thing, but it's a bad thing when there's a very small number of shareholders. It's really good that, projects like, Amazon, projects like, Google generate a lot of profit because it shows that, they could generate a lot of value, but it would be nice if the value was much more distributed equitably. So if everyone had a piece of this pie. Question here from Christian: how will the tokenomics of the Munich token look like? That's a great question. So for the Munich token, we have 100 million Munich tokens. 20 million of them go into our, 18 million of them are for sale. So they go to, 64 million go for sale, 16 million go for operations, and 20 million belongs to go to the team. The team have a 3-year cliff and a 5-year vest. So that means that the 20 million Munich tokens that are distributed to our 200 people core team, they don't just get it for joining the team. And what you see very often with crypto projects, people just dump the tokens. So with this 3-year cliff period, they only get 60,000 tokens after 3 years and 100,000 Munich tokens after 5 years. And it basically aligns the incentives. And the other 64 million tokens, it gets sold in $1 million Munich tokens increments. So the first 1 million Munich tokens, being sold at 1 cent raises $10,000. The second round is at 2 cents and raises $20,000. And we basically have modeled it such that every single round it increases at 61%. So it's based on 1.61, which is the golden ratio, and it's a very nice way of gradually introducing supply of Munich tokens to the market. And all of these funds, you could be wondering, hey, like, where does the money go? And all of the funds go directly to the treasury. So it basically provides this floor and provides this foundation for the Munich token to thrive. And question here from Kritka: does it mean Munich's token is limited in Elastic? Absolutely. So there are 100 million Munich tokens. There won't be an increase of the number of Munich tokens. And what we expect is that it's very similar to how an ETF operates. So if you want to participate in, I was giving a talk last week. I was on a panel, and one of the people asked, like, it was through the startup ecosystem Berlin, and one person asked, is it possible to invest in the entire startup ecosystem Berlin? And my fellow panelist, who was super well accomplished angel investor in Berlin, one of the earliest in the ecosystem there, he said, unfortunately, it's not possible to invest in an entire ecosystem. You have to invest in specific companies. You have to invest in specific projects. And I said, at the moment you can't, but in the very near future, with our Berlin token, with our Munich token, it would be possible to buy into a particular ecosystem. And what we're doing with Unit, with the city and industry tokens, we're just showing what's possible. Like we think, we're focused on 50 industries and 50 cities. We think that there's going to be 50,000 industry tokens and 50,000 city tokens. And we've just focused particularly on these industries and cities because they comprise of a lot of people. They have a lot of economic activity. They represent, very big markets. If they were, nation states, there would be lots and lots of people. So, you can kind of think of nation states and countries as being an idea. The United States 300 years old, Indonesia 40 50 years old, Singapore where I grew up 50 years old, Germany maybe a few hundred. I mean, actually not even that long. Modern day Germany is in its newly formed is 20 something years old with East Germany, West Germany, and it's really quite a new thing, this idea of nation states and imaginary lines with, the European Union, the United States, China, like these huge regions of countries. And then if you broke it down slightly, instead of having big continent countries or nation states, you've got, things like, Japan or South Africa or, Brazil or Peru, like country states. And then you push it a bit more, you've got city states, things like, Monaco, things like Singapore, things like Hong Kong. You can even push it to the other side where you've got, suburb nations and states. And the issue is creating a government now is not super easy. The same way creating a newspaper or website wasn't super easy in the past. The same way, if you want to build your own telecom before, it wasn't tough. But now if you wanted to build your own app, which allowed you to communicate, it's much, much easier. It's really commoditized. So, we're really excited for a future where, everyone here on the call can create their own micro government. And then, anyone can participate in their micro government, partake in the decision making, partake in the value creation, and have super aligned incentives. When let's say one of your friends or someone you've been following becomes a huge success, you won't just be like, wow, I was right. I knew that, when they were up and coming, they had this potential and something special about them. But you'd be like, look, I bought, $10, 10 euros of their tokens, and now it's, worth an exceptional amount more. You can sell some of those tokens and, support and buy into other people who you think are doing interesting stuff. And, the real end goal of this is where, people don't think about the monetary aspect. Kind of like, now you don't really, it doesn't matter how much data you have or how fast your internet speed is. But back, 20 years ago, when you tried to download a video and it, took 5 minutes with the buffering sign, or, before when you tried to communicate and it was just really difficult because you've got a limited number of minutes on your cellular plan, now communicate, or, got 5,000 SMS a month. It's become commoditized. So we imagine, and we're pretty confident that this same phenomenon and the same evolution is going to happen towards the economy. And we're going to see was mentioned earlier about Christian mentioned about the stock exchange. So we're excited for a stock exchange for the entire world. And, I grew up in Singapore where, in Asia, there's maybe two places which are, sound jurisdictions, Hong Kong and Singapore. Everywhere else, like Malaysia, Philippines, Indonesia, Burma, and many other parts of the world like Africa, South America, they don't have the same regulatory system, that say the United States or the UK has. And even in these, heavily regulated, very stable jurisdictions like Germany or the United States and the United Kingdom, it's still very hard to enforce. So if let's say you worked really hard for a startup or a project, and then suddenly your co-founder says your shareholder agreement is completely worthless, you still need to work with a lawyer, you still need to go to court, and it's a very difficult process. The cool thing about tokens is the code is law. So if someone can be the most powerful person in the world, and because it's on the blockchain, it's not possible to just take it away from you. And we see that in a lot of places in the world, and I think a lot of people don't realize that there are a lot of people who don't have the same level of opportunity or equity that we're very lucky to have in the Western world. Question here from Christian, and please feel free to ask any questions or thoughts or feedback or advice. What blockchain will you use? So we are using at the moment the Polkadot blockchain. I'll actually love to show you really quickly how our system looks like. So I'll give you a sneak peek. So this is the unit network. So you can basically put in a name, an image, apply a symbol, and that basically allows you to create a token super easily. We have a wallet here, which basically gives you an overview of different tokens. You can transfer it, you can withdraw tokens, you can view different tokens. And when you create a token, you basically have a bunch of features. If you go to community, you can create a contest, you can create a store, you can write a paper, you can submit news articles, you can organize an event, you can create a group, you can sell some of your tokens to raise capital, and really profound is the bank and the treasury. So this basically allows you to see exactly how much digital assets a particular project has to operate, and a particular project has, in the worst case scenario, where everyone's selling and dumping the tokens. So and as well as the exchange. So why are we using Polkadot? So we kind of, in the last 3 minutes, we started off with Bitcoin, super profound invention, allowed you to transfer value in a peer-to-peer way without a central party, like really revolutionary. And then Ethereum kind of said, hey, payments are cool, but let's build other things, decentralized payments, let's build decentralized news, let's build decentralized social network, let's build decentralized Uber, But then the problem with Ethereum, it's trying to do all of these things, but it's on one blockchain. It's kind of like, imagine you build one road, and the road is for everything. The road is for playing football, the road is for driving a car, the road is for driving trains. Everyone's trying to do everything on this one road, this highway, this Ethereum blockchain. And Polkadot basically was started from the same people as Ethereum, and it said, hey, let's build blockchains for, instead of a general purpose blockchain like Ethereum, let's build application specific blockchain. So let's build a road, let's build a blockchain for, say, the fashion space, let's build a blockchain for the logistics space, let's build a blockchain for music. And all of these blockchains can work together and talk to one another. And we're a blockchain specifically focused on the token economy, and we're really excited for a future where everyone is able to easily create a token in a super seamless way. The same way building a website used to be really difficult, and now it's just completely seamless. The same way communicating, you can download one of these messaging apps, and you've basically got a way to communicate with almost everyone in every corner of the world. When before, if you were in a rural part of the world and you wanted to talk with someone on another rural part of the world, it would have been very difficult, expensive. You needed to ring them and they would pick up at the same time, and now it's super seamless. A question from Karsten: where in the world do you expect the fastest adoptions for city, community, and industry tokens? This is a great question. So in terms of cities, we see this likely to be prevalent, where there's a lot of people who see the value in community ownership and in a way for an innovative way of distributing value and raising capital. So and heavily dense places, so like densely populated places. So if you live in a place which is a little bit rural, not so cutting edge in terms of innovation, it's a little bit tougher to get the network effects. It's kind of like social networks. Social networks started off in extremely compact regions, and then it kind of spread all around the world. So we kind of see it. We think it would follow the same kind of pattern. And in terms of industries, we think it will happen in industries where there's a lot of strong monopolies or people who control an industry, and they see the potential in this being an easier way to raise capital, distribute capital more efficiently, and more importantly, align the incentives. So I'm just going to wrap up now. I really appreciate everyone's time, and please feel free to reach out if there's any way I can help or support or get behind anyone and what they're doing. I'm always investing in new projects and helping support or advise or get behind however. Yeah, really looking forward to the next session. Maybe over to you, Mark, and then you can do a kind of introduction. Thank you so much, everyone.
Thank you very much, Michael. That was very insightful. Of course, if you have any question, you can reach out to Michael or to me anytime to further connect.